And it's 6
sorry.
o'clock.
Thank you very much. 6 o'clock, all the meeting to order. Just as a allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All members are present.
Thank you very much.
There.
Thanks, Jerry. And so, welcome back, everybody, and Happy New Year. First item on the agenda is the approval of minutes from December 16th, 2025. I need a motion to, so moved. Thank you. Thank you. And the second one.
Second.
Thank you. I guess everybody had a chance. Everybody had a chance to take a look at the minutes, and so any comments, questions, changes? No, if not, all in favor, please say aye. Aye. Thank you. Opposed? No, thank you very much. Public comments? Fair enough. There's only one agenda on our meeting for today, and that's the presentation from Mahoney Saybrook. So I think Michael?
Yes.
Yes, Michael. Thank you. And Samantha, you're both on, so I'll turn it over to you whenever you're ready, unless Leanne has something to say before then.
No, they do this every year, present to the Board of Finance, and they sent these materials, which we've received electronically, as well as we just handed them out to them too. They have them in person here. So I would recommend just hand the floor to them and let them give their presentation.
Great, thank you very much.
All right. Well, thank you very much. Again, my name is Mike Van Deventer, and I'm a partner at Mahoney Saybrook, ultimately responsible for overseeing the audit work and issuing the reports on behalf of the firm. Joining me this evening is Samantha Thomas. Sam is a senior manager at the firm. She was really, her responsibilities really were the day-to-day execution of the audit work and working with the town to accomplish the audit by the filing deadline. So we're happy to be here this evening. Again, Happy New Year's. You should have received multiple reports, the financial statements. We do issue some compliance reports. In addition to that, there is a governance letter. So again, I'm not going to go through those reports in detail. I have my presentation, which really kind of provides an overall summary. So I'll go through the presentation and certainly happy to answer any questions that any of the board members may have. So with that, I'm going to share the presentation if I have that capability. Okay, can everyone see the screen? All right. So jumping to the first slide again, I'll cover the scope of work, the audit reports that were issued. I'll provide some overall financial highlights. I'll make our required communications. Again, our communications are really, geared towards when we run into issues during the course of performing the audit. I think you'll find, based on the communications tonight, that the audit went very cleanly. So as far as the scope of work, again, we performed an audit of the town's financial statements. We performed that audit in accordance with both the auditing standards issued by the American Institute of Certified Public Accountants, as well as the government auditing standards issued by the Government Accountability Office. In addition, based on the level of federal and state funding that was received and expended by the town, we did perform both federal and state single audits. In addition, we also perform an agreed upon procedures engagement on the end of year reports that are filed by the school district with the State of Connecticut Department of Education. In addition to those attest services, we do also perform some non-audit services. So we do assist in the preparation of the town's financial statements, as well as the schedules of expenditures of federal awards and state financial assistance and the related notes. We also assist in converting the town's governmental fund financial statements to the government-wide financial statements. In order for our firm to be able to perform any non-audit services for the town and remain independent of the town, management is required to oversee those services and ultimately accept responsibilities for them. Again, Leanne, in her role as the finance director, has accepted responsibility for those preparation services. In connection with the audit, we do issue several reports. In terms of the report on the financial statements, we did issue unmodified clean opinions on your financial statements. Again, we issue an unmodified opinion when we've concluded that the financial statements are fairly presented in all material respects in accordance with accounting principles generally accepted in the United States of America, and that is as established by the Governmental Accounting Standards Board. I do like to point out, in terms of our opinion, we do provide only reasonable assurance that the financial statements are free from a material misstatement, whether due to error or fraud. So again, an audit does not provide absolute assurance. We do utilize sampling in our audit methodology. The financial statements do include estimates and judgments, and therefore we cannot provide absolute assurance. But reasonable assurance is still a very high level of assurance. In addition to the report on the financial statements, we issue a report on compliance and on internal control over financial reporting. In this report, we don't actually express an opinion on the town's compliance with laws and regulations or on the effectiveness of the town's internal controls. Essentially, during the course of performing the financial statement and compliance audits, if we become aware of what we consider to be a material non-compliance with laws and regulations, or a significant deficiency or material weakness in the town's internal controls, we are required to include it in this report. And again, we do not report any such matters. In connection with the federal single audit, we issue a report on compliance and on internal control at the federal award level. In this report, we do actually express an opinion on the town's compliance with its major federal programs. So for fiscal year 2025, the total federal awards that were expended by the town was approximately $1.9 million. The major program was the Coronavirus State and Local Fiscal Recovery Funds, which total about $1.3 million. Again, we did issue unmodified clean opinions on compliance, and we did not report any significant deficiencies or material weaknesses over grant compliance. We issue a similar report in connection with the state single audit for fiscal year 2025. The total state financial assistance that was expended by the town was approximately $2.4 million. About $2.2 million was considered non-exempt and subject to our audit work. The major programs were the Clean Water Fund, which was just over $1 million, and the Small Town Economics Assistant Grant Program, which was $500,000. Again, we did issue unmodified clean opinions on compliance, and we did not report any significant deficiencies or material weaknesses over grant compliance. So again, in connection with the compliance testing, we do expand our testing above and beyond what we would normally do for the financial statements. And again, we had no issues with that test work over compliance. Next section goes over your financial highlights. I will say that we did not have any significant audit adjustments that ultimately would have impacted the information that you as a board would be receiving or making decisions on in terms of year-end transfers. The first slide here goes over your budgetary highlights. Again, your original and final budget did not provide for the use of fund balance to balance your revenues and expenditures. Your actual budgetary surplus for fiscal year 2025 was approximately $3.9 million. Of which $3.2 million was subsequently transferred to other funds for authorized purposes. Again, the town has a number of initiatives that were funded with the budgetary surplus. This did result in an overall net change in fund balance on a budgetary basis of about $650,000. So your budgetary surplus was really driven by your revenues, which were about $2.8 million more than budgeted. You did have favorable collection on property taxes, building permits, town clerk fees, and you've really been able to maximize your investment income on the bond portfolio. Overall, your expenditures were approximately $1.1 million less than budgeted. And again, there were no instances of budgetary noncompliance that we identified in connection with our audit work. Next slide goes over your governmental fund financial highlights. So again, this includes your general fund on a GAAP basis, as well as all of your special revenue and capital project funds. The total combined ending fund balances was approximately $30.9 million. That was an increase of about $4.8 million from the prior year. In terms of your overall fund balance, the general fund had an ending fund balance of $10.7 million. That was an increase of about $1.1 million from the prior year. Of the 10.7 million, 9.3 was considered unassigned, and that represented about 17.7%, or just over 2 months of your fiscal year 2026 budgetary expenditure appropriations. Again, that is right in line with the GFOA recommended unassigned fund balance reserve. The capital project fund had an ending fund balance of about 10.2 million. That was an increase of about 2.5 million from the prior year. Your capital non-recurring fund had an ending fund balance of about 4.6 million, a decrease of about 1.1 million from the prior year. Your economic development fund had an ending fund balance of about 1.2 million. That was an increase of about 954,000 from the prior year. And then all of your other funds had an ending fund balance of about 4 million, which was an increase of about 1.2 million from the prior year. And all those funds are either restricted or committed for specific purposes. As part of the audit, one of the things that we do look for is any potential deficit in fund balances. Again, there were no fund deficits that were reported as of the year end. Next slide goes over your government-wide financial highlights. So again, this includes your governmental funds converted to a full accrual basis of accounting. So it includes all of your capital assets and long-term liabilities. The focus on the government-wide financial statements from a user perspective is typically on your long-term liabilities. In terms of your net pension liabilities, the town plan had just about a $4 million net pension liability. That was a decrease in the liability of about $705,000 from the prior year. And again, that was really driven by current year market gains on your plan assets. That plan is well funded at about 88%. Again, that's using a reasonable discount rate of about 6.75%. The net pension liability for the firefighters plan was about 1.8 million. That was an increase of about 468,000 from the prior year. That fund overall is about 54% funded. Again, that's utilizing a slightly lower discount rate of about 6.5%. The town is also recognizing a liability for other post-employment benefits that reflects healthcare benefits that are provided to eligible employees. The town currently funds those benefits on a pay-as-you-go basis. The majority of that liability is based on an implicit rate subsidy at the Board of Education with the teachers' access to the school district's insurance plan. The actuarial determined liability for those benefits was approximately 6.4 million. That was a decrease of about 1.5 million from the prior actuarial measurement. And that does reflect a decrease in the discount rate from the prior year based on the 20-year municipal bond index. The last slide goes over our required communications. Again, these communications are really geared towards when we run into issues during the course of performing the audit. The first item here talks about our responsibility under our auditing standards. Although we do assist with the preparation of the financial statements, again, they are the responsibility of town management. It's our responsibility to perform our audit procedures and express our opinions on those statements. In terms of the plan, scope, and timing of the audit, again, there were no changes in the overall scope of work or the timing of the audit. And again, all reports were filed by the 12/31 statutory filing deadline. Again, I think probably less than half of the municipalities in the state of Connecticut were able to file timely. So again, it's a great job by the town finance department in terms of closing the books. In terms of significant audit findings, the town did implement a new accounting standard this year, GASB Statement 101 on compensated absences. Again, the GASB continues to keep us busy implementing these new statements. But that did result in a decrease in the beginning net position of the town's governmental activities. And really the change with this statement went from where the town would accrue a liability for termination payments that would be made for any accumulated sick or vacation time to a usage base. So again, you're accruing both usage and termination, whereas under the old standard, you only accrued for termination benefits. So again, that did result in a decrease in your beginning net position. That statement has no impact on your budgets or your governmental fund reporting. In terms of significant estimates and judgments, again, there are a number of estimates that are included in the financial statements. consist of your estimated useful lives that are assigned to your capital assets, as well as the estimated amount of vacation and sick leave employees will use in future years, as well as discount rates that are utilized to determine your net pension and OPEB liabilities. We did review those estimates. We did deem them to be reasonable and consistent with industry practice. Happy to report we had no significant difficulties encountered in performing the audit. Again, the town did provide us with all information that we requested in a timely manner. We had no uncorrected misstatements, so any audit adjustments that we may have identified, we did propose to management, and they are reflected in the financial statements. We had no disagreements with management. We did obtain a management representation letter. Again, there were no unusual representations that were requested by us from management. And again, I just give the board the example that if we were testing a transaction and we were relying on the representation from management regarding the transaction, meaning we couldn't support it via documentation, we would communicate that to you. And again, we're not aware of any consultations by management with any other independent accountants. Again, if management did consult with another accountant, we would be required to communicate or have communications with those accountants to make sure that they had all the facts and circumstances regarding the consultation. And so with that, that concludes the overall presentation. Again, I'm happy to answer any questions that any of the board members may have.
One question on the discount rate that's used for the pension liability. I assume you audit, I'm new at the board, so this may be an obvious question, but I assume you audit other communities as well?
We do. We audit over 20 municipalities.
Okay. Is the 6.75%, is that about average? High, low?
Yeah,
As a
so
discount rate?
typically we'll see discount rates anywhere between 6.5% and 7%. Again, the state of Connecticut, I think, is using a little bit higher of a discount rate than that, but yes, in terms of other municipalities, that is very consistent. And I think if you look at the market over the last 10 years, in fact, I think the investment gains that you've been realizing has been actually a little bit higher than that percentage.
And we work with our actuary, Milliman, to help the pension board set that rate. So there's another set of eyes guiding us on the discount.
And with rates coming down, the discount rate's likely to come down.
We've been moving it down, but for this year, they said we're good, you know, and they.
Yeah, the discount rate is.
recommend we were
Sorry, Lan. The
Go ahead.
discount rate is really based on the overall market, which includes both the bond market as well as the equity markets. So again, I think it's certainly an appropriate discount. The GASB standard does recognize that municipalities may be utilizing different discount rates. And then in the financial statements, there are actually disclosures of what your net pension liability would be if you increased or decreased your discount rate by 1%. And again, that's to help, compare, one municipality to another.
Thank you.
14 years ago, the pension board was using 8.25. We've lowered that over the years.
I had a question, and thank you very much for the report. This may be more for Leanne, and you may have already explained this in the orientation, but the difference in discount rate in the fire departments of the town, is there sure there's some reason?
So, yes, there is. So the fire department is done every other year, the evaluation, and because it's a smaller plan and the town is done every year. So we anticipated that we were going to be lowering the rate to 60 because we lowered it a quarter
Years
point.
ago,
So
okay.
1 year we lowered it 25 basis points for the town, and we said, well, let's do 50 for the fire department and we'll catch up next year.
Okay, thank you.
But the actuary said, no, you don't need to change it.
Okay, thank you.
Michael, can I have a follow-up question on the same topic? And so I was trying to calculate how you came up with the 4 million for your pension liability, and ballpark is you can basically take the percentage as non-funded multiplied by what our total amount is in a pension and come up with a number that's pretty close to that. I come up with something pretty close to 4 million, but not quite exactly. but if my math is correct, then are you saying that by the time we get to 100% funded, we will have no liability? Is that how that math works?
That is correct. So in your financial statements, you will not reflect a liability once you're 100% funded. In fact, if you go over 100%, you would actually recognize a net pension asset. And again, based on the market gains in recent years, we do have some municipalities that are in a net pension asset perspective. But yes, you are correct. If you're at 100%, you would technically have no liability.
Right. Yeah.
Although there would still be a funding piece, because again, that liability, that net pension liability is factoring in future contributions that you'll be making to the plan.
Other questions? Michael, can I follow up on a different topic? So, slide 9, where you talked about changes to the new accounting practices. The bottom, let's see this, right, bottom section, first bullet item. This perhaps is more a question for Leanne. So I'm not sure I quite understand why just changing accounting practices will actually change the value of the compensated absences.
So yeah, Leanne, I can
ahead,
try
you can do
to
it.
simplify it because it is somewhat confusing. But the best example I could give you is, under teacher contracts, union contracts, typically they can accumulate sick time from one year to the next, but they are often not paid out upon termination for any unused sick time. So under the old standard, you would only accrue a liability for any sick time that you expected to pay out at termination. Under the new standard, they want you to accrue a liability based on what you expect that teacher to use of what's been accumulated from prior years. So again, that means they're currently still working for the school district. They're taking sick time. The standard wants you to recognize a liability associated with the use of that time.
The auditors also recommended that we create a policy on compensated absences to be presented to the Board of Finance, which I am working on. We're trying to make sure that we can do it, mathematically, put the process in place first and make sure it works, and then bring the policy to the Board of Finance. So that is forthcoming. So just want to remind you about this when the policy does come through.
Any other comments or questions? I just want to add one more comment, and I think you've mentioned this several times. I think Leanne was very much instrumental in doing this report, and so I think thanks again, Leanne, for her contributions to this report as well.
Thank you.
Yes, my only comment would be you want a vanilla report.
Yes.
Not exciting, it's good.
Plain vanilla, right?
Yeah, unfortunately, in our industry, the less communication by us, the better for you.
Understood. Thank you very much, Michael and Samantha. Anything else that you guys want to add?
No, again, I just appreciate the town's assistance. Again, happy that we were able to meet the statutory deadline, and again, no significant issues. Otherwise, again, they would have been reported in our report.
Thank you so much. Thank you.
Thank you.
Thank you, Leanne.
All right, thank you, everyone.
Good night.
Thank you.
Nice.
you.
I would actually like to skip an item. I think we had a public comment before the presentation on Leanne. So if there's somebody online that would like to make a comment. I missed them. I apologize for that. Comments from board members? Comments from me? I have none. Welcome back. We have another meeting coming in a few minutes. And so I will adjourn this meeting. Need a motion to adjourn?
I'll make a motion again.
Thank you. Second? Second. Thank you. All in favor, please say aye. Aye.